Hi everyone. Today we're going to talk about a very up-to-date and relevant item of current affairs, the 2007-2008 World Food Crisis, or just the World Food Crisis, as it actually went on a lot longer than that, but it's generally associated with this period. But before I begin, I just want to give you a quick content warning, because there's some rather unpleasant pictures of child malnutrition that happen within this video, so if that's something that's very sensitive to you, then maybe you don't want to watch the screen and you can just listen to the audio. Okay, so it's not that new. So why am I talking about a crisis that was in the news 10 years ago and calling it current affairs? Well, I think it's an incredibly relevant example of some of the problems and even violence caused by the system that we live under today. And by that I mean markets, and specifically deregulation and the notion of the free market. And God knows, over the past 40 years, we've heard a lot about that.
Countries across the globe are turning to free markets.
The free market.
Markets.
The free market.
The free market.
The dynamism of the market.
Free markets.
The power of the market.
Free market.
Free markets.
But before I get onto that, for those of you who don't remember or were too young at the time, let's go over the basics of the global food crisis of 2007-2008. What actually happened? Part 1. The global food crisis. What happened? Well, from 2006, food prices, especially cereals and grains like wheat and corn, and also other staples like soya, began to rise. Over the following several months, food prices continued to rise and rocketed, often doubling or tripling in some places, over 2007 and 2008. It's unclear when it really finishes, as a drop-off in 2008 and 2009 just reached into a further spike in prices peaking in 2012, so it's complicated. Anyway, back to 2007 and 8. The result of this was that in many poorer communities, particularly in the global south, people just couldn't afford to buy staple food sources, or doing so took up too much of their budgets, which pushed an estimated 75 million people into hunger and 125 million people into poverty. It's hard to project a death toll of people directly starved by this price rise. There already being a lot of hunger in these parts of the world, and certainly I can't find a figure for it. But I think it's safe to say with the numbers pushed into poverty and starvation, we are talking about a huge number of deaths from this price rise. Note that I call it a price rise. This was not a famine. There were some price rises due to poor harvests and localized famines in the years leading up to this, which clearly affected the price, but not enough to alone explain the huge rocket in prices. There was just not a widespread enough problem in the production of grain at the time to account for this. The problem was not supply, it was demand. Now, this isn't some Malthusian argument about how we're all going to die because we're overpopulated and our demand on the resources was too high. No, the demand problem was not one of population, but a problem of market speculation. Of course, as I said above, this crisis wasn't entirely a market invention. A little price rise was due to some supply issues, but the market forces exacerbated this problem to turn a small fluctuation into a global crisis that starved millions. And I think it's important to look at how that happened. And to see that, we need to look at the idea of the free market. Part 2. Some relevant context on the free market and deregulation. Okay, so I'm going to do a little bit of history here, and some of you might find that a little bit boring, but I promise you it's important to understanding how something like markets can lead to a situation where so many thousands of people are starved to death across the world. So, let's have a look at the history of the free market. Okay, so the free market, or laissez-faire, is a concept that was originally advocated by Spanish theologians to protect trade across its transatlantic empire from restrictions. Generally, at this time we're talking about state restrictions emanating at this point from the king. But for the sake of time, and also where my knowledge is best, I'm going to focus mostly on the UK and US, so sorry for my Anglophone bias. It is taken up in some form by the early liberal thinkers, notably John Locke, Adam Smith, Jeremy Bentham, and J.S. Mill. Again here, it's articulated in response to levies on trade enacted by kings and later governments, and, to be brief, it argues that trade should be carried out without or with the minimum of government interference. I intend to do videos in the future which will give more detail on this period, the early market thinkers, the horrific working conditions, wars, and oppressive practices that were defended by laissez-faire or free trade in this period of early capitalism. But for now, suffice to say that while there was never any period of unrestricted trade, free trade and similar ideas were used to defend dodgy business practices and appalling working conditions, to prevent the regulation of business, nationalisation and taxation, and as a motivator for policy, with varying levels of success up to the Wall Street crash and the Second World War. I acknowledge that this is a huge generalisation, but we're being brief here. With the Wall Street crash, new regulations came on free market capitalism, notably in the US with Roosevelt's New Deal policies. And after the Second World War, in much of Europe and America, it fell briefly out of fashion in favour of capitalist economics in the style of John Maynard Keynes, who advocated for regulation and taxation within a mixed economy, with some parts under state control, and social welfare systems and services to provide a safety net and a better quality of life to the working classes. Markets were regulated, key industries like energy and transport were nationalised, and the wealthy paid tax on their incomes to provide for society. It was certainly not the end of the free market, and many would argue it didn't go far enough. Certainly the New Deal and European Keynesianism did not eradicate poverty or market capitalism, but a certain degree of regulation was put in place to prevent some of the most extreme free market practices, and there was a more general acceptance of market regulation in the political mainstream. However, the free market didn't just go away, and at the same time, a new fundamentalist free trade movement, based on the work of economists such as Friedrich Hayek and later Milton Friedman, not to mention the novels of Ayn Rand, was emerging and would lead to what we now call neoliberalism. This new trend found a political voice in the politics of Margaret Thatcher in the UK and Ronald Reagan in the United States. They advocated a new age of free market policies which involved privatization and deregulation of markets, partially based on the belief taken from Hayek that markets were actually an expression of the will of people, and that these systems, through meritocratic, social Darwinist competition, would select dynamic individuals whose special creativity would create the innovations to move us forward and the jobs of the future. Therefore, they believed that the freer they made the markets, the more dynamic individuals would be produced, and the freer people would be to express their desires through the market system. This is a huge generalization, of course, but we are being quick here. So Thatcher, Reagan and their political contemporaries began slashing regulation left, right and centre to allow their business chums to flourish.
We have cut the growth of new federal regulations nearly in half. In 1981, there were 23,000 fewer pages in the Federal Register which lists new regulations than there were in 1980.
And boy did they flourish, and they kept demanding more and more regulations lifted, until today.
We are going to be cutting taxes massively. We're trying to get it down to anywhere from 15 to 20%, and it's now 35%, but it's probably more 38% than it is 35, wouldn't you say? That's a big thing. A bigger thing, and that surprised me, is the fact that we're going to be cutting regulation massively. We think we can cut regulations by 75%, maybe more.
Part 3. So what does this have to do with the global food crisis? To look closely at the causes of this crisis, I'm going to borrow heavily from the report Casino of Hunger, How Wall Street Speculators Fueled the Global Food Crisis by Washington-based NGO Food and Water Watch. It's very short and it's available online, so I encourage you all to read it yourselves if you have doubts. But what I'm saying here is definitely not new, and there are a ton of other sources online that say the same thing, not to mention books. Some are in the sources, but if you're still unsure, I invite you to have a Google and see that this is not an outlying analysis of these events. So one of the things that got deregulated in the orgy of red tape slashing that was the 1980s was something called commodity futures. Commodity futures are basically a trade in the promise of a given product. And a good example of how this works is with food, and that's literally what we're talking about here, so let's have a look at that. So a farmer has a field, and they think they can grow about £1,000 worth of corn in it, roughly. Now this amount can vary from year to year, with harvests and weather and so on, so to get the best security on their field, they sell the crop before they plant it. A company gives them an advance on the projected value of the field, let's say £1,000, although in practice I'm sure some undervaluing of the product is involved in an attempt by the company to guarantee their profit. They then have that money guaranteed to live on, and the company takes any surplus or loss, but knows it has a guaranteed right to the product. The company now owns the commodity future of the corn from that field. Now this all seems well and good, right? The farmer gets a guaranteed income and the trader gets a guaranteed product. But what happens if this is not the last transaction? What if the person buying it isn't just going to make something with it or sell it to consumers? What if they want to sell the food future itself for a higher price? Well, if just one person does this, not a lot happens. But if lots of holders of these futures try to sell for higher and higher prices, then the price rises. And the more they do it, the more the price rises. The New Deal in the 1930s had brought in some protections to limit the amount of financial speculation that could be done with food, and you can see why. If a famine resulted in a low supply and the value of the products was expected to rise, people may speculate on the food futures, buy these financial derivatives of food to sell at a higher price, and make the effects of the existing problem much worse by just trading ownership of an as yet non-existent food. But in the 1980s, there were so many fancy financial futures being invented, the regulators lost sight of simple things like food futures, and speculation in food was gradually able to increase. As the Food and Water Watch report says, the hands-off regulatory approach blurred the distinction between the physical hedgers, like farmers or flour mills, in the agricultural commodities futures markets, and the speculators that dominated the financial futures markets. The CFTC, Commodity Futures Trading Commission, effectively removed the position limits on large speculators in agricultural markets, and allowed some futures exchanges to become self-regulated or even unregulated. Even while the rules were being weakened and the volume of contracts was growing, the CFTC pulled cops off the regulatory beat. The number of CFTC employees fell by nearly a fifth, from around 550 staff members in 1999 to 458 staff members in 2007, while the volume of contracts traded on CFTC-regulated markets grew fivefold from 1998 to 2007. And here we come to the world food crisis of 2007 and 2008. So, from at least 2006, if not before, a combination of factors was coming together. First, there was a new demand on the market, biofuels. Bush-era carbon trading policies and a sharp rise in oil prices had increased the interest in producing biofuels, diverting food stocks from feeding people to producing these fuels. But this alone did not produce the trebling of prices we saw in 2008. This upturn in price, however, did interest financial speculators who were already starting to worry about the security of their property investments, which, of course, as we all remember, would eventually fail, resulting in the 2008 global financial crash from which we are, here in the UK at least, still recovering. As the report says, since the housing market began to implode in 2007, investors began to move into the commodity market to diversify their portfolios, motivated especially by moving into a market that was not evaporating in value. These investors were treating commodities as another type of asset, just like investing in stocks, bonds, or real estate. The rise in new investors drove up prices for consumers. So food seemed like a secure commodity with a rising value, and in the absence of regulation, these investors created volatile commodity index funds to trade food and other commodities in the way they previously had with other assets such as property or shares in companies. This created an artificial scarcity as, while the consumer demand for food had not grown beyond expectations, the demand for its financial derivatives, food futures, grew, and with them grew the price. And boy, did it grow. Here's a graph showing the number of contracts created involving futures of corn, soybeans, and wheat from 2005 to 2008. Here's a graph of the world food prices in the period. And here's soybeans, corn, and Chicago wheat specifically. And now here's a graph of world hunger rates from 1969 to 2010. And this hasn't gone away. Here, in a later graph, we see the spikes in 2012, which I referred to earlier. So there you have it. That's my point. Bye! Only joking. So why have I just gone through this process to show how free market systems caused the global food crisis? Well, obviously it was to make a point. So what is it? Part 4. My point. We now stand at a crossroads in our societies. For years we have been told that free market solutions will make us all more prosperous and that it is the only way to run an economy. But, well, it hasn't worked. The world food crisis is a perfect parable for understanding why unregulated markets are a terrible way to make social decisions or to run human lives, because markets do not care about human lives. Free markets exist under capitalism, and yes, we are talking about capitalism here, and capitalism values profit. Companies and people are expected to compete in the free market under the profit motive, that is, to make as much money as possible. No theorist of the free market disagrees with this. It's not an unintended outcome. It is proposed as a value to exist under capitalism. In the 2008 World Food Crisis, we see how those profit-driven markets act when given unrestricted access to the physical world. First, we see how it is perfectly possible to take a commodity that is vital to our lives, like food, and, rather than manage its distribution to best feed everyone, the market, in fact, prefers to forego feeding people if another use, say biofuel, fetches a higher price. One might think that feeding people is a bigger priority than fueling cars, and grain-based biofuel is not a proper renewable, so I don't think they're saving the planet from climate change by doing this. Reference in the description, but let's not get sidetracked here. But for free market capitalism, that's only true if selling food to the hungry makes you more money. And that's clearly not true, or we wouldn't have more than 10% of people in severe hunger, unable to meet their daily nutritional needs, and over half of the world living on less than $2.50 a day. What's more, this shows that the free market values not just other physical uses for vital commodities, but back and forth inflationary trading between speculators just to enrich themselves more than any humanitarian outcome, like, say, not starving millions of people. This increases the value of the commodity, but as long as someone will pay the price, for whatever purpose, it's fine. The new value becomes justified in market terms and will likely continue to rise. Of course, this helps neither the hungry seeking food nor the producer of biofuel, as the price inflates for both. Though, of course, I think we can all agree that the biofuel company has less at stake here than the hungry people. So in this case, free market, capitalist relations literally starved people across the third world to death just to trade back and forth the financial derivatives of the food that could have saved them. This is real, and this is not an isolated incident. In fact, it happens every day, but it's not always as obvious. The global food crisis is a really clear, defined example showing this effect. Markets prioritize profits over people, so you can imagine what happens when these same motives are brought into housing, or healthcare, or education, or employee conditions, especially in the third world. The human good is traded away insofar as it is not compatible with raising the profit of the investment, which it rarely, if ever, is. Our societies have been torn apart by neoliberalism, by the profit motive, by capitalist self-interest, the offshoring of jobs to sweatshop labour, the crushing of union rights and workers' rights, stagnating wages in the UK and increasing insecurity of 0 hours gig economy labour, homelessness, austerity, unemployment and underfunding of schools and privatisation of public health, or refusal to give it in the first place in the US, not to mention the resistance to thinking of serious solutions to climate change, an existential threat to our whole species, because of how it would hurt certain business interests, and even outright denial of the problem in some cases. These are just a few examples of how this profit motive impacts our societies. This leaves us living in a system that promotes and rewards greed and ignores the needs of those that greed takes from. And the greedy are never the ones that suffer. None of the people starved in 2008 could afford to get rich trading those food derivatives. No, the trading was done predominantly by the rich in first world countries, and those who suffered were predominantly the third world poor. As they say, money begets money, and our system only serves to make the rich richer at the expense of the poor. The people who profited from those trades were those who already had plenty, those who needed it least. To be clear, I'm not just trying to tell you a sob story here. I'm trying to highlight an act of systematic violence, an example of how systems we live under can enact indirect violence on huge populations, depriving them of food and cracking down on the subsequent unrest when people object that the system is starving them. And this certainly happened in this case too. In places like Bangladesh, Burkina Faso, Cameroon, Mozambique, not to mention Pakistan, where the army was deployed to defend fields and warehouses from the hungry, and Egypt, where a young boy was shot by forces suppressing a food riot. This list is by no means exhaustive, and Wikipedia has a list of civil unrest and government action stirred by the 2007 and 2008 food crisis. So here we not only see the economic, systemic violence enacted on these people, but also that this violence is then upheld and backed by direct, state-backed, physical violence when the people dare to question it, as is so often the case in these situations. I said before, the that we are at a crossroads, and we truly are. I think it seems clear that the problems caused by this uninhibited free market capitalist project have become visible to much of the population. Centrist politicians, after decades of trotting out the same market policies, are becoming less popular and having to fend off political challenges from the left and from the right. But people to the right are demanding that we ignore these problems of the free market and blame our current predicament on lax social values, female dominance, Jewish conspiracies, and immigration stealing your jobs, which is bullshit, by the way. I'll probably do a video on specifically why that's bullshit soon, but I'm just going to say that it's bullshit for now. They propose social constraints, restricted civil liberties, restricted immigration, and stronger institutions of state violence as a solution, often paired with and backed by the same neoliberal economic ideas. But at the same time, there is a growing and increasingly radical left politics which is challenging these notions and wants to reimagine our societies away from these free market capitalist systems and systemic violence. I think this is a hopeful fact. The market cannot save us from itself. To solve these systemic problems, we need to change the systems and the basis on which we design them, to start thinking about solutions not based on the economics of greed and profit, but on that of providing everyone the needs of life, to build a society that provides for all the people, rather than one which takes from the many for the benefit of the few. Otherwise, we will just get more of the same suffering, just to further enrich a few powerful people. So when people in the centre try to tell you that the free market is the solution to our problems, or when people on the right say the same, or combine it with some argument about threats to the West, or why we should be really afraid of Muslims, or some other nonsense like that, maybe think again, and see if there are some voices that are offering alternative ideas, not based on hate and division, or on the same old economics that cause these crises, but on providing for all the people, and making a world that is better for everyone. Okay, so this was my first video, so I'd really appreciate your feedback if you want to leave some in the comments, or send me a message. And if you liked it, please like, share and subscribe. I hear that's a thing that people do. And thanks for listening, everyone. Goodbye.